Well, let's go across to Anita Gandhi, whole-time director of Arihant Capital Markets from Mumbai, and Ashish Kelkar, chief technical analyst of Priskin Technical Analysis, joining us from Mumbai for all your stock queries. First up, we've got an SMS from Darius, who writes in from Mumbai. He owns 100 stocks of Central Bank of India, purchased at 169 rupees, and would like to hold that counter for a year. Anita, in a scenario like the one we have right now, where the macro picture clearly indicates that there is going to be aggressive rate hikes that is expected in the next couple of months as well, of course, that's not going to be good news for the banking majors. Margins are expected to be impacted quite heavily as well. What do you do with the Central Bank of India? Do you hold on to it, given that the investor is a long-term one?
This bank, in terms of its branch network, it is third largest in India, and in terms of its loan book, it is 11th largest. This indicates, in terms of CASA, it has a very strong CASA of around 35, and its guidance about growth, they have given a growth guidance for deposits and advances at 25 and 20%. The differential between its branch network and its loan book suggests that there's a huge potential if utilized within this bank. This bank can be proved to be very good. It has a NIM which is higher than 3%, and guidance there is around 3.25%. I fully agree with you in terms of tightening which has started. It will put pressure on overall banking system in terms of pressures on their NIM. But looking at the strength of this bank, even in terms of CBS, it is such a large bank having such a wide branch network, and it is 100% CBS compliant. This shows that this bank itself, it has very good strengths, and if properly utilized for a one-year horizon, I feel investor, it's a good conservative bet, and investor can get her money back.
Yeah, Ashish, the stock has largely been an underperformer compared to the rest of the banking pack in the last 1 year. Looking pretty weak, right? It seems to be gripped in a bear territory.
Right, Samina, I agree to you. This stock has corrected from a level of 240 to a level of 130. At 160, it has formed a bearish price pattern, a descending flag formation. So the supply potential is telling me that the next target would be around 95, 97 odd level. EMAs are also negative, so definitely I would recommend to exit from the stock immediately.
Well, that's a sell coming in on Central Bank of India. Next up, we've got another caller. Joseph calls in from Trivandrum. Hi, Joseph. What's your question?
I'm holding 25 shares of Coal India at IPO price. So I'd like to know, what would be the right exit price? I'm willing to hold it for the long term. So should I look for a near-term target of 400, or should I hold it for a long term for higher gains?
Ashish, the investor Joseph has picked up Coal India at 232 rupees. The stock has been doing exceptionally well. In fact, even in the last couple of days, there was quite a bit of buying on good volumes that was seen on Coal India. What is your advice? Exit at 400 in the short term, or wait and hang on to it for the long term?
Definitely I would recommend to hold on to the stock, because it is showing me a strong demand potential on the chart. For long-term investment, I should look at the medium-term as well as long-term charts, and both the charts are suggesting me to hold on. But as this investment is long-term investment, I should revise my stop loss every weekend. As of now, the chart is suggesting me that there is a minor resistance at around 396 level. And the buying potential can be seen at 343. So I would recommend to hold with a stop loss at 340 as of now, and this investor should revise its stop loss on weekly closing basis.
Right, that's pretty much the technical call coming in on Coal India. Anita, one big positive for the investor is that he's picked it up at the IPO price, and the stock has done exceptionally well since listing. Of course, the big concern with Coal India is that you've seen a huge spike, mainly on back of the price hike that took place in February of almost 30%. And of course, that is going to be reflected in the numbers as well. Going ahead, are you expecting, or are you advising the investor to hold on to Coal India, because about 14 to 15% top line growth is not bad by any standards?
Yeah, our investor must be aware this is the largest coal producer in India, and also in the world. Its quantities are pretty huge. Another second thing is in terms of its top line, it comprises of one is the price and volume. In terms of volume, recently management has given a view that this rail rake rates have gone up, in the sense the quantity of coal which was flowing through railways now, there was a limitation on account of the capacities. Those capacities are rising. So in terms of volume, we can see slightly increase over there. In terms of price, the February price hike has given a clue that coal prices can rise. In July and June, July, again one more price hike is expected. This will add further to the top line and also to the bottom line. On the other side, in terms of its rising cost, employee cost is also likely to go up again in the month of July, which could put pressure on margins going forward. But overall, looking at the overall fundamentals of the company and the increasing power capacities in next few years coming up in India, I feel this is a very, very sound company in which investor can remain invested for a very longer time, and he will be yielding the benefits of his investment. So it's pure hold.
Well, that's the call coming in on Coal India. Technically and fundamentally, that counters the whole. Next up, we've got an email from Lakshmi, who writes in from Mumbai. She's a financial planner herself, owns 15 stocks of Infosys at 3,300. Anita, what do you advise the investor to do? Is it worth holding on to? Would you say 3,300? That's the buy price. I'm assuming she is a long-term investor. Hold on, would you say?
Long term, if she is, unless and until she is at least looking for minimum 2 years. As far as Infosys is concerned, we have seen in past 7 quarters, the company was always beating its whatever guidance it was giving in terms of actual results. But last quarter was not the same, and there was a slight amount of disappointment. That's how stock saw a very good correction. Currently what is happening is company is moving into higher end and into consulting business. For that it has done a lot of investment. That investment will start yielding results after 1 year's time. And also on the utilization side, if we look at the current utilization is at much lower level. Whatever new recruits have joined, they will now going forward, they will be starting giving their results of their work will start coming now. So going forward, whatever lag of work happened in the March quarter, there was some amount of the projects they got delayed in March quarter. The results of those projects also will be coming in the existing quarter. So we expect next 2 quarters for the company to be very good. At the same time, recently you must have noticed that company has changed its name from Infosys Technologies Limited to Infosys Limited. That indicates that company now wants to move into the higher end of the channel, and for that lot of efforts have been done. These efforts will start yielding results maybe a year after, and that can put some amount of margin pressures on the company in the immediate future. If investor is willing to hold it for at least 2 years, then it's a clear-cut hold, and we have initiated coverage on this stock, and we have a price target of 3,500 on this stock.
Well, that's a clear hold coming in on Infosys. Technically, Ashish, what do you make of it? The stock has not done too badly in the last 1 year. Of course, it seems to be in the seller's radar very soon after the numbers were announced. It's not really done a meaningful recovery after that. 3,300 is the investor's buy price. Would you advise a hold or a sell, actually?
Yes, definitely I would recommend to hold. But adding more stocks, adding more shares on this particular level, I will not recommend, because averaging when the stock is falling down is not right way of investment. After Jan 2011, the stock has made another lower top in April 2011. Previous bottom was made in March 2011. Means the price is forming a trend reversal price pattern, which has a bearish implications. If the price closes below neckline value of 2830 on a weekly closing basis, then there will be a sharp fall in this particular stock. So hence I would recommend not to add, but hold on with a strict stop loss of 2825.
Well, that's a hold coming in on the counter on Infosys technically and fundamentally. Well, that's actually all the time we have on buy or sell. Ashish, before I let you go, your stock picks and disclosures, please.
No stock picks, and the disclaimer is I do not hold any positions in the stocks that we had discussed. Thank you.
Right. What about you, Anita? Your stock picks and disclosures, please.
Currently no stock picks, and even I do not hold any of the positions or investment in the stocks which we have discussed. Thanks a lot for inviting me on this show.
Right. Thanks very much, Anita and Ashish, for joining us today on the show.